supply side, you can divide that by the network value, and what you get is basically the dollar value that has gone into the capital expenditure to support the network per dollar secured by the network. And so for things that plan to be a digital gold or a store of value, you would want to see those have a higher capital expenditure per dollar secured by the network. That was relative valuations, a quick exploration, and we'll dive into intrinsic valuations now, which are more contentious. So before I do, I want to read a quote from my mentor, Cathie Wood, who says, "During the next few years, not only will disruptive innovation continue to change the way the world works, but it will render traditional gauges of economic activity inaccurate." And so this problem goes far beyond crypto. And there's a lot of problems within macroeconomics and accounting of how do we deal with the increasingly intangible nature of our economy, because clearly there are productivity gains, but many of the existing macro metrics do not reflect those productivity gains. And so with that as a preface, when I approach crypto networks, I approach them as a single or multi-service emerging economy. Again, these are not companies, right? They're not operated by a group of people that are extracting profit from the system. It's an open source software that uses a native unit of account to coordinate all of the economic agents in that system. And just because, as coming from Cathie's quote, just because the services provided are largely digital doesn't mean that they don't have specific unit economics or that they don't have value. There are a lot of people that will say, oh, these things, they don't have any value. I can't see them. I can't touch them. But for example, Facebook, that is a 100% digital service that provides, say, a lot of value to the world. And just because it creates cash flows doesn't mean that the originating instrument isn't one that's purely digital. And so similarly, with crypto networks, these largely digital services, I've got an alarm. Someone's alarm is off over here. Not mine, but someone else's. Okay, so with that, the most common, or the equation that I use within the crypto space is the equation of exchange, which is a contentious equation within macro generally. And what the equation reads as is M is the size of the monetary base, V is the velocity, so the number of times a single unit within the monetary base turns over in a year. So using the US with a monetary base of 4 trillion and a velocity of 5, we get 20 trillion. And then the right side is the GDP, or the size of the economy, where P is the average price of a basket of goods and Q is the quantity of goods. And so on the right-hand side, again, the US economy is approaching roughly 20 trillion. This is an identity where the two sides should match one another. And what I do is somewhat unorthodox. I use the equation to solve for the necessary size of a monetary base in dollar terms, really the network value in dollar terms, to support a crypto economy of size PQ at a velocity V. And so to dimension this, I put out a blog about a year ago, which you can find if you just search crypto asset valuations. It should be the #1 hit. And this model is open source, so you can download it and play with it if you'd like. And so I'm going to just walk through briefly the steps. So in part A, that's really me trying to get at the number of units of a crypto asset circulating within the economy. And so that's really just dimensioning the monetary policy of the crypto asset. B is dimensioning the economy, the PQ. And I do this, this is for a VPN network, a virtual private network that is provisioning, you can think of it as private gigabytes. And so the P is really just using a cost decline. I can look at the current market rate for VPN services and layer a cost decline on that, looking at historical market rates for VPNs. Q, the quantity of gigabytes provisioned, is harder. I have to look at the total addressable market and then use an S-curve to figure out the adoption that this VPN network will achieve within the broader network. And that will give me, once I have that quantity in any given year, I can multiply, let's say in 2025, the price per gigabyte in 2025 by the quantity of gigabytes provisioned in gigabytes, and that will give me, in dollar terms, the GDP of that crypto economy. And so part C is really where I'm figuring out the adoption rate. And then once I have the size of a crypto economy, I divide it by the velocity to get the necessary size of the monetary base. And once I have that size of the monetary base in 2025, say, I also have the number of units circulating in 2025. And so I divide the necessary monetary base by the number of units, and I get the dollar value per unit in 2025. And then part D is discounting that utility value in 2025 back to the present, because assets are not priced based on present expectations, but future expectations. And so by discounting back to the present, here I use a discount rate, again, of 40%. Whatever value I get there, if the asset is trading below that, then it's underpriced. If the asset is trading above that, then it's overpriced. Again, this is contentious. We don't have enough data to really prove out the predictive power. But certainly, at the very least, it allows us to see the levers of value flow within the crypto space. To give a little bit more insight on that, this is where I'm just looking at the cost decline. So the P within this VPN network, and then Q, the quantity of gigabytes provisioned. And so within a crypto economy, it will grow in size so long as the unit volumes are outpacing the cost decline curves. And so that's something that's important to consider within a crypto network. The other thing that's important to consider, and this has been a big conversation within the space, is the velocity. I kind of glossed over it, but velocity has always been a problem within macro metrics. And velocity, this is using the exact same numbers for the model, except just changing velocity. So the blue line shows the required monetary base with a velocity of 20. The orange line, the required monetary base with a velocity of 50. And the red line, the required monetary base with a velocity of 200, or 500. And so the more quickly that an asset circulates within an economy, the more utility per unit of asset provided. And so actually you need less value per unit in order to support a crypto economy of size PQ. Alex Evans, who we recently hired at Placeholder, actually did better work than myself, building upon the foundations of MV equals PQ that I set forth. And so this is a blog that's worth reading. And what he did here, he placed a single crypto asset in the context of a broader pool because these assets don't operate in isolation. He decoupled the demand for a crypto asset as a money versus exchanging it for the service provided by the network. He included payment patterns. So for example, I may consume 10 gigabytes of a VPN network, but I may not pay all of that in the first month of the year. I may pay it over time, and that actually affects the flow of value. And most importantly, he projected velocity endogenously to the model. Whereas I was using it as an arbitrary input, really based off of past work I had done on Bitcoin and looking at Bitcoin's velocity and saying, okay, will this asset have a higher velocity or lower velocity than Bitcoin, by how much? And so Alex's work is worth looking at. If you don't buy MV equals PQ, then there's a lot of work right now going into using options theory to actually price crypto assets. And this is where you can think of a crypto asset as a call option on future utility value with a very far out expiration date, potentially no expiration date, which make it a very, very high value option. Or you have a probability weighted expiration date I'm not a options or derivatives expert, but I know there are a lot of smart people who are. And if you're one of those people, I'd love to talk with you. There's professors that are working on this. These guys are coming out of UChicago. There's a bunch of smart people who think this is a better way to approach the pricing of crypto assets. And so the great thing about this market is, or any market, is the truth will win out. We will find out over time based on the data and seeing where values gravitate to. And with that, I'm done. Thank you very much.